Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And I just came back from a trip to Ireland, and the first thing I had to do was check out the news with Alibaba stock, try to figure out what the hell's been going on, see what's been going on while I'm out of touch with the world. And we had a couple big news points, particularly one this weekend. We're going to talk about what that means for Alibaba investors like us, or bag holders, I should say. Get that.
Two Super Guys Trade Stocks.
So if you guys saw my short, I'm definitely not buying a castle with my Alibaba shares anytime soon. It's not going to happen. Market's too ridiculous.
Hey, man, it had no roof though, so.
Yeah, I had no roof, and it was still out of my price range. It's ridiculous. But Baba stock was down 5% in the last 5 days. I go to town, I lose 5% of my money on this goddamn one investment. It's ridiculous.
I think it was probably your fault. I don't fully know what happened, but I'm pretty sure it was your fault.
Definitely my fault. I should have planned my vacation somewhere else. So, looking it up, there are a couple headlines that are, kind of driving this bus here. One of which is Alibaba specific, and one is just China macro. Alibaba specific, I don't know if you saw this, but basically, they talked about how breaking up into multiple different segments, and then they would kind of unlock shareholder value is the thought process there, which, I certainly get the argument for it. The problem is that right now in this negative, pessimistic macro environment, which we're going to touch on here in a second, that it's hard to get a good valuation for your businesses, right? So they had this Freshippo kind of grocery business. They were hoping to get, I think they had $6 to $10 billion valuation, and they, based upon kind of survey data, was coming in at a $4 billion valuation. So, significantly less than what they thought they were going to get. And that was going to be the first one they're going to bring to market of their new subsidiaries. It kind of sucks, right?
Not great. Not ideal at all. But it's like a small segment, so.
Yeah, exactly. But it kind of tells you that whole plan about unlocking shareholder value by spinning off all these different subsegments probably not going to happen for a while, because this is supposed to be the first one, and this is coming in at say if the midpoint of the other valuation 6 to 10 was 8 billion, right? It's right in the middle between the two because I'm a stupid guy. You're coming in at 50% of what your expectation was. So would it be wise to sell it at this time?
So I will say there was two things for the shareholder value. There's this, what you're talking about, but there's also being able to make moves faster because you have less corporate structure, right? Because you instead of having all these entities, which we saw in the last quarter, they killed it number wise. So I would say that's more important, but yes.
Yeah, I agree. I don't really love the whole idea of splitting up in all these multiple business segments. Because truthfully, if you acquired them, you expect them to grow and contribute to overall. Why would I split it off unless I can get above market valuation of what I think the business is worth? So right now, when they're looking at their valuation coming in, basically double what the market is pricing, it doesn't make sense to go forward with an IPO of the Freshippo unit at this point in time. And they were saying, sometimes the next year, for KNow, they haven't really talked about the idea of valuation on KNow, whether or not it's going to be even feasible in the market. KNow has some great kind of growth behind it. It's been absolutely tearing it up, and it's going to become I think it's the third unit within Alibaba that's become cash flow positive. So, a little different kind of moat than Freshippo, but it doesn't spell great opportunity for that environment.
That's fair. I agree.
Yeah. And as far as the whole macro thing, CPI for Chinese economy came out this weekend on Saturday, actually. And it was pretty pessimistic headed into the report because they had reported deflation in the previous one. Do you know why deflation is so bad for an economy? Is this something that you've ever read about or come across?
Negatory.
So think about it from a logical standpoint. In deflation, right? My dollar is worth more tomorrow than it is today.
Right.
So it makes more sense for me to accumulate cash and hang on to it than it does to spend it, right?
So which would be worse for the economy as a whole, because they're all
exactly.
Okay, so all stimulus stuff is done. Okay.
Yeah. Everyone ends up just storing cash in their basement to the best of their ability, right? Because the cash is worth more tomorrow.
It's kind of counterintuitive, but I mean, okay, I'm not good at this stuff. So anyone who's like, Dylan's an idiot, you're correct. Wouldn't, when you had that much inflation that fast, isn't a little bit of deflation not the worst thing? Because in this situation, it's more unique.
Yeah. It would be more prolonged deflation that you would really be worrisome about. If you get a little kind of blips of deflation over time, that's not entirely ridiculous. But if you had a prolonged phase of deflationary forces, people would read the tea leaves, so to speak, and just keep hoarding cash. And that's what you really wanted to prevent. Otherwise, it really can hurt the economy. So in July, their number was negative 0.3% for their CPI. So CPI was down 0.3% on a year-over-year basis. August number came in positive. This is the one that just got released this weekend at 0.1%. So, not in deflationary environment right there, still very weak inflation, but, not a continuation of the previous trend. They did kind of break out, I think it was a Goldman Sachs report talking about where the inflation was, prevalent within the economy, and that energy prices are driving this, right? We've seen gas prices come up globally, oil prices going up. So that's been like the buoy for their, inflationary forces to prevent deflation or stave that off within China. But they have a couple of really serious issues here where you have both a kind of a drop in exports. So people are buying less and less from China. And then internally, the Chinese economy itself is weakening. The domestic economy has, coincided with this plunge in the country's exports. So they're doing poorly shipping out and poorly within the country. So there's definitely some serious headwinds there from Alibaba being the largest e-commerce player in this country. But, people are often so bipolar when it comes to this stuff. Yes, this is an issue, but to throw the entire Chinese economy, the second largest economy in the world, out is insane to me, right? It's going to get better. Is this going to be a little period of growth?
So I will say, on top of all that bad news, there is, this is a little bit old, this is a little bit under a month old, but 40% of Chinese home sales have defaulted. So there's also a whole nother problem. And anytime anything that has China bad economy in a headline, Bob is going to get hit every single time. Doesn't matter.
Yeah, exactly. But this is the important thing to keep in mind here. If you ain't first, you're last. That's exactly the mentality that we're coming at. If China isn't growing like the fastest economy in the world, then like it's complete another garbage. In reality, like I said, it's the second largest economy. They're doing okay. They're going to continue to make money. The economy is going to continue to prosper.
I would agree. I wouldn't be surprised if we have a couple rough years and this BABA chart ends up looking like Apple, where it did nothing for 5 years and then just like shoots up like a stupid amount.
I'm okay with that, because don't forget they're buying back shares. Remember we talked about this last quarter. Both you and I basically bought an additional 1+ share of Alibaba stock by doing nothing, because they had repurchased like 1% of their float over that time period. Now that is good for us long term. That's how you get that parabolic shape eventually.
Yeah, completely agree.
But if you're feeling a little bit like Rocky here, okay, you just like complete punch drunk over here, just getting that crap beat out of you. Don't worry, we're with you on that one. All right.
Yeah.
But you know what? You gotta take the punches if you want to come out on top eventually.
The problem is with this, I can't. This is one stock where I just can't bring myself to do covered calls, because it jumps around so often and it's traded like 20 hours a day. Like the stock chart's terrifying, because it just like starts like $8 higher the next day. It's like, what? I can't do it. I know you can. I can't.
I mean, whether or not it was wise for me to do it, I don't know. I'm still doing it. I will tell you that. I just checked this morning, and all my options positions right now are doing well, and they're expiring. I think this Friday that I'll reissue for another month from now. That's just what I do.
Nice. All right, guys. Let us know what you think.
Catch you next one.